Bitcoin is just about to hit $100,000 and has had a phenomenal rise this year, coming all the way from around 37K or 40K at the start of the year, right? Now, there's no guarantee where the price might go tomorrow, but if you want to know the most low effort, long-term strategy for making money with Bitcoin, then stick around, as in the next few minutes, I'll explain the best strategy for you. So the name of the strategy is dollar cost averaging. But before we get into that, as the price rises of Bitcoin, it often acts as a growth mechanism, attracting more and more people into the space, which is great. Some of these people become deeply interested and decide to stick around and become full-time participants, such as myself. But most people only become passive observers, and that's totally fine. You don't need to be full-time to make money out of this and to reap the benefits, right? Unfortunately, many people, when they do start, they get overly excited, they buy a bunch of random coins that their friends told them about, only to find themselves getting burned and losing most of the money they invested. This is unfortunately very common in crypto. Now, if you don't want to go through that and your only goal is just to passively invest and make a profit, then you should probably be dollar cost averaging. So dollar cost averaging is one of the simplest investment strategies out there, and it's basically where you invest into Bitcoin or any other asset at a regular amount at a regular interval, right? So, most people receive their salary once a month. So usually people will take a regular amount that they're comfortable with, say $100 per month, and put that away to save. To DCA into Bitcoin would be to take that $100 every month, and instead of saving it, you'd be buying Bitcoin, which is a form of saving anyway, right? You could do this daily, weekly, bi-weekly, whatever you prefer. Monthly is just, it just makes sense for most people because most people earn a monthly salary, right? But the key thing is to do it at regular intervals with a regular amount. And it's such a simple yet elegant strategy. It removes all the risk of putting more money than you can afford to lose. You'll sleep easy, and you buy at the average Bitcoin price over time. It's so simple, in fact, that most people just don't believe it can work and will decide not to do it and instead try something much more complicated and unfortunately probably lose themselves money. Now, if you want to access over $1,900 worth of courses entirely for free, then click in the description, the link in the description that I'll leave below, and set up your first crypto wallet so you can start DCAing yourself and make money in crypto too. Okay, so now you could simply put that $100 in the savings account every month, which is what most people do. However, all government money, whether it's dollars, pounds, euros, yen, whatever it is inflationary by definition, right? All central banks have a target, an inflationary target for their own currency. So, it might be 2%, whatever it is, depends on the country. The thing that happens is, in a year, 2% inflation isn't a very big deal, but 10 years, 20 years down the line, that means your $100 you're putting to save today will not be able to buy you the same amount of goods and services as it would as 10, 20 years down the line. Meanwhile, Bitcoin is the opposite. Bitcoin has a fixed total supply of 21 million coins in total, and so it tends to be deflationary in the long run, right? So the very same $100 that you buy of Bitcoin today will be worth more in that length of time, which is the opposite of keeping it in your currency, right? So to put this simply, Bitcoin is a fight against inflation, because even though the price is volatile, the fact it has this fixed supply means that as more and more people get into Bitcoin, the price trends up. So then the next question is, why not just buy as much Bitcoin as possible immediately today? Well, Bitcoin's price is highly volatile. So if you buy up front, you might be buying at a local top and end up paying a higher price than you actually need to, and that could actually cause fear and anxiety as the price drops, right? You may feel, oh no, I bought at the wrong time, I'm not gonna, I'll sell, right? Rather than if you were to just buy a set amount every month, you pay the average price over the months and years, and you tend to get a better price, and you remove all that fear and anxiety. On this website here, DCABTC.com, you can estimate the returns, and I did that here, on different DCA strategies, and I did that here before. And you can see in this example, if I'd been doing DCA strategy of $10 per week over 3 years, I would have invested $1,570 in total and got a return of 112%, which is just a bit over 2x, right? You can see that is what would have been gone. Meanwhile, with the same period of time, if you'd bought the same amount of money the 3 years before, rather than DCAing, then you would have had approximately only a 20% gain, because you had actually bought at a local top. You would have been buying at a quite high price, right? And so you'd only in the end have this 1,890 rather than 3,339, and you'd have all the stress, right? Since DCAing a regular amount doesn't make a big financial difference for you, you can keep it going for a longer amount of time, so you get the better price and you can sleep easy, right? It's so encouraged by Bitcoiners that they even have a term for it called stacking sats. Since the smallest divisible unit of Bitcoin is called a Satoshi, or sat, if you regular DCA, then you're regularly buying more sats and stacking the sats, right? So it's highly recommended in the space. Now, as I've said a few times, most people, when I tell them to DCA, will either feel like they've missed a boat or that it's too simplistic a strategy, and instead try to buy a bunch of other coins. This is generally a mistake. You can buy coins that outperform Bitcoin. So, Solana in the last 2 years has massively outperformed Bitcoin. But the thing that happens is most people will tend to round trip their profits. So they'll see the profits go up. They'll see, the money go up, and they'll just feel euphoric and ecstatic, and they'll leave their money in there. But over time, as this graph shows, most coins have trended out, right? Whereas Bitcoin has just kept growing and growing and growing over time. So, you might buy a coin that has a huge growth, but over time just drops and goes down to zero. And this, like I said, would be round tripping. Whereas you could have just bought Bitcoin DCA'd and in the end ended up with a higher return over the long run. Bitcoin is just built differently, right? There's a number of reasons for this, and I'll make a future video about it. I've already made posts about how Bitcoin is like digital gold and other sort of concepts, but yeah, that's the case here. Now, there are other ways as well. You can play the cycles, right? Crypto does tend to have 4-year cycles, and you can try to time the cycles, and buy in on the lows, sell in the high. Once again, this is risky for most passive observers because they're not actively watching the market. They don't know when that's going to happen, and they might make a mistake and time it incorrectly, right? So for most people, DCAing is the best low effort, long-term strategy in crypto as a whole. Now, it's important to end this video just by saying that, this is, I've been in the space for over 8 years, and this is what I've observed and learned, but I'm not a financial advisor. This is not a financial advice as such. You should do your own research and find the data, that backs your strategy before you take on any financial risk yourself, right? Now, if you want to access over $1,900 worth of courses entirely for free, as I said earlier, then click the link in the description and set up your first crypto wallet so you can start DCAing yourself and make money in crypto too.